Welcome everyone to another episode of the EXP Presence Market Outlook series. I am Kavita Agarwal, the founder, and today we are here to talk about Nifty and its correction course. Nifty has been giving a very sharp correction since the last 1 week. It has declined nearly 4 to 5% in just 1 week, which is pretty sharp. Opening gap down every day, but today was, well, it was a sharp recovery, and I'm sure a lot of you are feeling quite surprised. But is this something out of the ordinary? Is Nifty being erratic? Absolutely not. This is exactly what happens every time. As soon as a major support level is breached, like we saw the breach of 22,000 level on Nifty just yesterday, the Nifty always gives a strong pullback. And this is exactly what we're seeing, or you can also call it a throwback. So in today's session, I'm going to take you through Nifty, Bank Nifty's chart and the intermarket intersector analysis chart to help you assess where the momentum is headed so that we can recapitalize. Also, I want to talk to you about how far is this correction expected to continue and how should you capitalize on this temporary recovery for the benefit of your portfolio. So let's go towards the chart now. Now, before I begin with my discussion, I want to give a reminder to you that if you have stock queries for me and if you'd like me to analyze any stock in your portfolio where you might be incurring huge losses, hop over to this link quickly, exp-invest.in/stock request. Fill up this form, mention your stock name, cost price, your name and WhatsApp number, and I will do the analysis and get back to you with my comments, my targets, stop loss levels, actionable advice, everything. So hop over to this link. As I'm done with my analysis of Nifty, Bank Nifty and intersector analysis, I will turn to your stock requests. During the session, if you have any comments, if you have any questions about my analysis methods or any technical questions, feel free to drop it in the comment. I will pick it up. But if you have stock queries, you need to fill up the form. So this was a 3-minute time frame of Nifty, as you can see. All these white lines are representing key support levels which have been breached in the last few days. So last week, if you saw, we discussed about the 22,000 to 700 resistance level. And then we saw that Nifty had, on last Friday itself, taken resistance and turned downwards. My prediction was about the market that this correction is going to continue, and continue it did. So we've seen the first leg of the correction continue all the way to the level of 21,850. My personal expectation was that the first leg is going to continue all the way to 22,000 and then show us a reversal. Now, if you're somebody who's part of my Telegram channel, and if you've joined my Telegram channel, then you might have had a chance to take a look at my yesterday's commentary on Nifty. And yesterday I said that Nifty is expected to go down a little bit and come back down, and it has actually given a very similar setup, like taking support of the 50 EMA and giving a bounce back very recently. So let's quickly go over November 23, where it gave very similar price activity. So before I do that, just want to highlight here that yesterday we breached the level of 50 EMA for the second time after the correction, and a major psychological resistance, that is 22,000. And if we go back to the time of November, this is also what we witnessed here. We breached the 50 EMA. So the yellow line that you're seeing move across the chart is the daily time frames 20 EMA, right? It has been formulated in such a way that it reflects precisely on the 15-minute time frame also. In October, November, we witnessed a breach of this level, a gap down, and a strong pullback. This pullback lasted for somewhere around 2.5% or to the most recent resistance level, after which we saw another leg of rally. So coming back to the current market scenario, if you calculate 2.5%, today we covered around 1.5%, so we can expect another percent or so of recovery. So my personal resistance in the market is anywhere between the level of 22,325 to 22,500. So I am expecting some recovery here, and this recovery is not even out of the ordinary. If you know about the Elliott wave theory, correction always happens in 3 legs, leg A, leg B, and leg C. So what we have seen so far is the unfolding of leg A. The throwback is the unfolding of the leg B, and then we're going to have, so that's leg A, that's going to be leg B, and then we're going to have C, which I expect the market to take to 21,650. Another thing that I also want to discover back in October is how many days did the throwback continue for. So over here, if we see this throwback, again, this throwback also did not happen very smoothly. It had a lot of wave structure in it. It took around 2 weeks. Now you'll see that whenever a major correction is happening in the market, it takes around 1 to 2 weeks to just register the throwback. The reason is sentimentality. Right now the market is extremely bearish. So today's market movement was a shocker for everybody. Now, what is going to happen in the next few days? As the market continues to go upward, people are going to get a little eased. Confidence is going to start seeping in. Retail traders who don't really understand market knowledge, who don't understand where to capitalize, how to capitalize on this throwback, or how to use this throwback to protect their capital, are going to end up investing fresh capital into counters where rally might already be exhausting. So when that starts to happen and a sense of complacency sets into the market, that is when the next leg of rally begins. So remember that unfolding of the market's price action is largely a part of sentimentality. So coming back to the recent price action, what I'm expecting is over the next few days, we can see a retest of the level of 22,000, say 350, and anywhere between 22,500 also. Having said that, how should you capitalize on this? There are two ways to do that. See, when a market goes under major correction, it undergoes something very important, that is sector rotation. So sectors that were winners of yesterday are not necessarily going to participate in the rally of tomorrow, and sectors which have not participated in the rally of yesterday might actually come out of the slumber and start rallying. So one such sector that I'm looking forward to for fresh opportunities is the IT sector. So how can you capitalize on this? If you are holding on to winners of yesterday, make sure that you set up stop losses. Now, if you had set up your stop losses, then they should have been triggered by now. But if you're just waking up now and you did not set stop losses earlier, now is a very good time to exit those stocks potentially, because the winners of yesterday usually see sharp upside in this kind of a market throwback. Why? Because like I said, a lot of retail traders start rushing towards these winners of yesterday's to money from them now, but these are only giving an exhausted rally. So you should use this opportunity ideally to book your profits or losses while they're still small and get out of the stocks. And what are the kind of stocks that you should buy? You should buy stocks where possibility of a fresh rally is more, where the probability of a new rally beginning is higher. So instead of looking for stocks with short-term continuations, bullishness continuation, you want to look for stocks which have been bullish, significantly bullish on the daily time frame, and then switch to the 75 or the 15-minute time frame to see whether or not they've been rallying in the last few weeks. There are lots of such opportunities in the market right now. Some of those opportunities have already been shared with my members of the Trade Together program today. So what is the Trade Together program? Trade Together program is my initiative where I share swing trading recommendations as a SEBI registered RA with anybody who's interested in trading with my analysis. In the chat, I'm going to right now share the link of my Telegram channel for you to join. Just to elaborate on the Nifty analysis again, over here we can see the 20 EMA of the daily time frame, which is the yellow line, get breached. This breach took us to the important support level of 21,850. And from here, we are expecting a throwback to the level of either 22,350 or maximum 22,500. I believe the level of 22,500 is going to pose a major resistance on the index. After this throwback, I also expect the continuation of this correction to the 100 EMA, which is at the level of 21,650. Similar price activity has been noted in the chart of Nifty back in October and November, where the 50 EMA of daily time frame got breached, followed by a gap down and then a sharp recovery, which lasted around 2 weeks, followed by a continuation of the market correction. If you look at the chart of 75-minute chart of Nifty, the very clear negative range shift. So earlier, as the market continued to rally with strong momentum, we could see that RSI was well below above the level of 70 repeatedly. This showed that the momentum was very strong. However, in the last leg of the rally, which I like to call an extended rally because you can see the momentum is significantly reduced with lots of fits and starts, in this part of the rally, the RSI has significantly lost its range. It's barely being able to sustain above the level of 60. This is called a RSI range shift. And this was a telltale sign that Nifty is not doing so well and we can see a broad market correction. Now, we also see that the level of 40 has been breached here. This suggests that more correction is definitely yet to come. The same message is also being given to us by the daily time frame of Nifty, which also suggests we can expect correction. On the daily time frame, I expect the level of 40 to be tested very soon by the index. With that, let's move on to the Bank Nifty index and see what it has for us. So Bank Nifty, we can see, has declined nearly 5% from the top, similar to Nifty. The 3-minute time frame is suggesting lots of bearishness here. This also suggests that weakness will continue. However, we have definitely entered into a temporary phase of recovery in the Bank Nifty as well. Now, this temporary phase of recovery has also been preceded by a RSI positive divergence on both Nifty and Bank Nifty, as I've marked on the chart. And this is what encouraged me to share my observation on my channel that we can expect a resistance from 22,500. So if you want regular market insights during live hours, do join my Telegram channel. Link is already in the comment. So let me also show you how to join the Telegram channel. Simply hop over to your Telegram, type Trade with Kavita, and make sure you join the correct channel. There are lots of fake channels running with similar names and same profile picture. So once you've written Trade with Kavita, join the correct channel, which has comments from me and stock ideas and links to upcoming sessions on advanced trade training introduction, and has members around 5,925. right? So just hop over there. And if you want to connect with me, there are these meeting links and one-on-one session links every week that I post. You're more than welcome to register for a free session to connect with me. Now, moving on with Bank Nifty analysis. So the support level of 46,700 is what has lent support to Bank Nifty. And the resistance which I'm expecting to get tested in Bank Nifty is none other than the level of 48,116. Now, we don't expect this recovery to be a very straight up recovery. So on Monday when the market opens, we can expect a little bit of downside, but then continuation of this. The 75-minute analysis for Nifty and Bank Nifty is pretty similar. We can see the level of 40 got reached on the 75-minute time frame as well, which does lend some support temporarily to the index. But again, on the overall level, it does suggest that we can expect, while we can expect a little bit of throwback on the upside, we can expect more downside here. My support level or my expectation for the end of this correction on Bank Nifty is 45,200. The daily time frame doesn't add much color to the picture we've just drawn. It pretty much aligns with what we have already discussed. So with that, let us move towards the indices chart and see who has performed better than whom. So I just want to go back to the Nifty chart, and from when do I want to see the performance? So we see the market actually topped out on 10th of April. So 10th of April is when we're going to start comparing. So that would be the end of, so that would be basically the Friday onwards. So after Wednesday, Friday onwards, we want to see who has outperformed last Friday onwards. So massive decline in the market. As you can see, last week, all indices are in negative. Most of the stocks are also on a weekly level, on a weekly basis, have been in negative. What this tells me is that due to the overall negative market sentiment, if you've been invested in the market, you are bound to take a step back. Your portfolio is bound to take a step back, and it is completely normal. Remember, the market moves in a 3-step forward, 2-step back fashion. So there is no way you can beat that market activity in your portfolio. So your focus should always be to make sure that when the market is taking a step back, the negative impact on your portfolio should be minimal. That can only happen if you are on top of your risk management game. So set your stop losses and trail your stop losses all the time. Now, coming back to this chart, what we can see, the biggest loser so far has been the CNX IT. And like I said, my expectation is that when the next leg of upside begins, CNX IT sector is going to lead the charge. So it's totally fine that CNX IT is kind of letting go of the last bit of correction that's there in its system. I have no issues with it at all. The healthcare and the pharma sector, these are the two other sectors which has been in a bit of a rally of late, and it again seems to be taking a little bit of a beating. In fact, we can see that CNX Realty, Pharma, Healthcare, and PSB Bank, these are all the sectors which have been in a pretty strong rally, and now they're taking some setback. CNX metal sector is showing a lot of resilience, because I do expect that the rally that has been unfolding in the metal sector is going to continue. Auto sector, I am not very bullish at the moment. I believe it has been giving a strong rally, but I don't see a lot of opportunities for fresh entry here. So I'm going to steer clear of that. The infra sector also, I am seeing some signs of exhaustion, like L&T, there is a negative divergence. So I don't want to very aggressively venture into that. The energy sector does offer some selective opportunities. So if you are interested in the energy sector, be sure you do technical analysis very thoroughly on multiple time frames before you enter the stocks. Commodity finance, FMCG, I'm not bullish on the FMCG per se. Again, in CNX finance, it's always a mixed bag. Consumer durables, also a pretty big mixed bag there. This is the analysis of the charts. And now let's move on to the analysis of your stock requests. Now, just as a reminder, if you want to watch my past videos, for example, the last week's Nifty analysis or the last Wednesday's momentum moving analysis, just hop over to my YouTube channel, search the name Kavita Agarwal CMT CFA, and you'll be able to see it, and just watch my past videos. Now, if you've already filled up the request form, then let's take a look at your requests and start analyzing stocks for you. So we've already helped more than 100 people through this form, and let's see who are the people who are going to get their responses today. Like I always said, you have to be fast to get responses. So we see a lot of responses, and just don't worry if your stock doesn't get analyzed today. I will work on it in the next time I come live. But if you're feeling a little rushed and if you want my help right away, all you need to do then is over to my website or my Telegram channel, and from there you can book a one-on-one session with me earlier next week or as early as Sunday. Let's take a look at Matthew's request for RVNL. His cost price is 130. Should he hold or sell? So you've been holding on to RVNL for long term, it seems, and I would definitely suggest you to continue to hold. Despite of overall market weakness, RVNL has shown fantastic resilience. Do maintain a stop loss at the level of around 210 rupees. And as for your target, see, the market can take a little bit of time. If RVNL comes down to the level of 220 233, 250. You can also consider adding some more to your current position. And from a target perspective, it's very hard to give a target, but I would definitely expect at least the previous target to get retested, that is 350. The best strategy for you here would be to keep revising your stop loss. Check back with me for a revised stop loss level once the stock sustains above the level of. Now, for Lata ji, let's take a look at Alok Industries, where she's been holding since the level of 20. So I suppose you bought the stock quite recently. And over here, I can see the green line, which is 100 EMA of the daily chart. The 100 EMA lending good support to the price. So it looks quite resilient and it looks attractive. The RSI of the 75-minute time frame also is in a bull range, and I expect this bullishness in the stock to continue. The volume activity has been a little bit encouraging. Actually, the volume activity is a mixed bag. No, the volume activity is definitely encouraging because we can see as long as the price was very bullish, the volume activity was quite strong. But as soon as it started to decline, the volume activity also declined. And only when the price started to either consolidate or rise back up did we see positive volume activity return to the stock. So this is definitely very positive. I would suggest you to use a stop loss at the level of 24 rupees. And as for your target, I do see the stock try and retest the level of rupees very soon. So that is what your activity should look like. I'm going to set a vertical line and set an alert because this does look like a good opportunity even for fresh entry with the trade setup I've suggested. Now let's take a look at IEX for Syed. 20 is the cost. All right, Syed, your mentioned cost price does not seem to be accurate, so I'm going to ignore that, and I'm going to assume that you're interested in this stock for the long term. IEX, I believe, is a very good stock for long-term investment. For short-term, however, it can be a little bit volatile. So for short-term, what your strategy should be to start accumulating the stock already, irrespective of the exact price level. As long as it is below the level of 176, it's a pretty good stock to add to your long-term portfolio. And at the same time, you should also use the stop loss at the level of 121, making it safe-proofing your capital from further downside. I do see that IEX is a super trending stock. So it is right now coming out of a deep U-shaped pattern. It has taken support at the 200 EMA of the weekly time frame, and it has given a positive range shift on the daily time frames RSI. All of these are a very good signal, a combination of very good signals which suggests long-term recovery in the stock. Now let's move on to Prashant's request. Prashant, if you want suggestion of stocks that can rise up to 20% within a week, kindly join my Trade Together program, subscribe to my services, and I'll help you out. The reason why I don't give stocks with good potential in these live sessions and freely, a stock recommendation is no good without follow-up updates. This is exactly why you should not rely on any free advice that you get off of TV or Facebook groups or WhatsApp groups or even other Telegram channels. If you don't know the research analysts behind those recommendations, and if they're not accessible to you in case the market scenario changes just like it has right now, then that recommendation is going to do more harm than good. I hope that makes sense to you. Moving on, we have a request from Nida, and the stock in question is Engineers India, 240. Should I hold or exit in loss? So you're holding the stock at 240, and it looks like you bought the stock right after the rally at a very high price. Not a very good idea. However, the stock is pretty good, and I can see that up to the last green candle, the volume has been pretty resilient. The volume has been indicative of continuation of bullishness. So what I would suggest to you here, Nida, is use a stop loss at the level of and continue to hold the stock. I do expect the stock to attempt a test of the level of around 345 from the current levels. This can, however, take some time. It can take anywhere between 3 to 6 months. For Mohit now, let's take a look at Union Bank. 159 is roughly his target, 159. So again, this is another purchase right at the top. And unfortunately, I'm not very bullish on UCO Bank right now, considering there is the presence of a RSI negative divergence on the daily time frame. This doesn't make me very comfortable. Also, UCO Bank is one of those stocks which has rallied pretty sharply. So in the short term, at least, I would expect some correction in the stock, and my support level would be 110. So my short-term advice to you would be to exit the stock right away. Now let's take a look at Bata India for Sahil Mahajan. Now Bata India is one of the stocks where I'm definitely bullish, and here's the reason why. There is a nice little positive divergence on the daily time frame that is developing. On the 75-minute time frame also, we can see a positive divergence. Volume activity has turned very positive on the upsides. 15-minute time frame is showing that the volume activity is strong on the upsides and weak on the downsides, and this has been happening since quite a while. And the 15-minute time frames RSI is already moved into the bullish range. So all of these signs look quite bullish. However, that being said, what you need to understand about Bata India is that it is a super trender. And if you look at the weekly time frame, it has been in a correction. If you want to make fresh positions, it's prudent to wait for the stock to move above maybe 1400 levels. However, if you want to buy the stock for long term, then this is a very good candidate to buy into your portfolio for the long term. And if you're already holding the stock, then you naturally need to use a stop loss level, and it's very hard to give a stop loss level at this point of time. So what I would suggest to you, that if you intend to hold this in your portfolio for long term, buy the stock in very small quantities into your portfolio. Giving a stop loss level is exceptionally difficult, but if I have to name a level, I would say one, which as you can see is more than 8%, quite a big stop loss from here, but that is the most available level to us. Moving on, we have Jyoti CNC Automations Limited for Jimith, 648. So your position is in quite a bit of a profit, and you saw 26% upside almost right after buying it. And I'm sure the 15% decline might be freaking you out a little bit, but don't worry, the underlying trend looks quite positive here. And you're not able to see the volume activity because there is not enough data to showcase the formulation that I have to study volume. It's an MCD formulation. It requires a certain minimum number of days. And I would expect the stock to retest this previous high, which is a support level, so 650. So you can see the stock come down very close to your purchase level. As such, I would suggest you use a stop loss at the level of 625 and keep holding for the next resistance level 11 on the stock. Now, before we move on with some more stock queries, let's glance at the comments. Is this a stock pickers market, or better to be cautious and maybe avoid new longs or reduce position size? So Tayyib, it is better to reduce your position size as the market gives a throwback. Like I said, I'm expecting 3 legs in this particular market correction. We've only seen the unfolding of one downside. The other leg is supposed to be an upside, and the third leg is going to be a downside. That is what is going to be a picker's market. However, that being said, there are stocks in this current market also which are posing activities, or which are posing opportunities, but they're going to be very difficult to find. So if you don't have a system, if you don't have a strategy to hunt those gems in this market full of mud, it's going to be really hard for you. So if you are, however, interested in learning swing trading, and if you're willing to learn how to use screeners, how to use dashboards, how to use relative strength in the market to identify these gems, then do consider joining my advanced swing trade training program. The boot camp starts on May 1st, and it'll be broken into 24 sessions of 1.5 hours each, spread over 6 weeks. So just join my Telegram channel for more information about my upcoming boot camp. So Vishnu is asking how to get in touch with you. Please join my Telegram channel. That is the best place to begin. Ma'am, I have invested in FN in Hindustan. Please help with this prediction. Rishabh, you're going to have to get in the queue by filling up the stock request form. So no more comments that we need to look. I can just see a lot of stock requests. So let's move on with the next stock request by Srinivas. His query is for D. So another stock with a very strong underlying uptrend, but bought really close to the high, not even at a dip. So what I would suggest here is, it looks like this uptrend which has been unfolding has been a little bit exhausted, and I would expect some correction, at least 13 to 20% correction to unfold here. So my support here would be 208 rupees to anywhere between 190 rupees. And since you've purchased very recently, I would strongly suggest you use the stop loss at the level 20. Now, moving on to NCL India, purchase 20 for Mr. Rajendra. Should he hold or should he sell? So 220. Okay, again, you bought the stock after the rally and after the exhaustion of the rally. See, there is no reward for buying stocks after the rally. You need to get into stocks before the rally happens, while the trend is still new. Chasing stocks is a very bad idea and is almost always going to lead to losses. It's not a good practice. So technically, the stop loss level which I would suggest to you has been triggered. So if the stock kind of bounces back up, if the stock bounces back up to 210, you should consider exiting your position. And on the other hand, you should also set up a stop loss below this spike candle that you see here. Set your stop loss up at the level of 200.5, and if that gets breached, so whichever level gets breached first should be your ideal exit for the stock. Now, because this stock has also breached the level of 30 most recently, I expect this correction to continue and retest at least the previous low of 184. You don't want to be holding the stock for all of that level. And looking at the past activity, this stock has a tendency of double testing the bottom before posting a new rally. So I would definitely expect it to come back and retest the level up. With that, we come to the end of today's live session. Thank you so much for joining me for today's session. If you have questions that you'd like to ask me, the best way to do that is again by joining my Telegram channel. I'm hosting an interactive session on Sunday at 1:15 p.m. You're more than welcome to register for it. All you need to do is join my Telegram channel and register for the interactive session. I will see you again on next Wednesday at 5 p.m. where I will bring to you something related to chart analysis and specific stock analysis in my Let's Get Technical series. So until then, have a great weekend and namaste.